Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me at Financial Car Finance, and if you want to join our community, finding-value.com, where I dive deeper into all of these sectors, looking for potential investment opportunities. I do a lot of training, sharing my opinions on the market, which I think are very much needed for most people. I talk about strategies, I talk about position sizing, and all of those things that go along with investing. Grady says, have been talking for many years about the BRICS Plus will be taking over the global scene from the West. Many are now catching on to this. Have talked for long about their gold-backed monetary system coming, plus they're creating their own global institutions, killing the petrodollar, doing real cooperation, setting up an alternative world order, developing new global payment systems, etc., etc. We've also talked about that the East is completely different historical relationship with silver than the West has. And recently, Russia announced their plans for silver. These charts below reflect a global shift coming. And this global shift means enormous opportunity. This since commodities are at the core of this very, very big change. Watch the BRICS summit in Kazan from October 22 to 24 in 2024. Get ready in every way you can, enormous opportunity and a threat. So he's got the Wisdom Tree Emerging Currency Strategy Fund. It's got a breakout backtest and it's working out. We've got the EEM, which is the Emerging Markets ETF, and we've got a breakout there, rolling to the upside. We've got emerging markets versus the SPX, which is the US S&P 500. What he has here is the very good-looking 17-year blue bullish falling wedge tells us that the odds for a major shift in the general stock markets is high and a timely shift towards emerging markets. So what he thinks this is a very probable false breakout in the making. And he says, look for an end around apex move that comes around. Why would he think that? Currencies and the Canadian dollar and all that stuff, they all also are starting to break and put in bottoms. So it's all interconnected. We've got XAU gold priced in the Chinese monthly, ripping it in the renminbi. So a lot of things coming to emerging markets here, looking pretty good. Porter Stansberry. So the bond market is revolting against the Fed. And this is talking about the increase of interest rates on the long end of the curve that we've seen recently. He says this morning, yields on the U.S. 10-year bond soared over 4%. This continues a nonstop rise in yields following the Fed's 50 basis point rate cut on September 18th. Normally, long-term rates follow the path of interest rates in the overnight lending market, which the Fed controls. But this isn't a normal environment. Consider last Friday's blow-up jobs report, which was entirely driven by the biggest government hiring spree on record outside of COVID-19. Whoever believes our economy is strong must think borrowing unsustainable amounts of money, printing money to pay for those loans, and then hiring people to do wasteful government jobs is the path to prosperity. It isn't. The U.S. government is running deficits equal to 6% of GDP and only generating 3% of economic growth. In other words, if you remove government spending from the equation, America's economy is shrinking. We are on our way to a Soviet-like collapse in our economy as more and more of everything we do, including our jobs, are controlled by the government. Mr. Market is starting to sniff this out. That's why investors are dumping treasuries and flooding into gold, stocks, and real estate at record high prices. Meanwhile, we're witnessing an entire presidential election campaign without either major party bothering to address the single most important issue at stake in our country: America's unsustainable debt burden and the coming insolvency of the federal government. It is only a matter of time now until one day the US Treasury market suddenly realizes that no amount of printing will stop the collapse. There will be no bid for our country's bonds. And on that day, everything you think you knew about America will be completely gone. And this is the US 10-year yields soar despite the Fed rates cut, ripping higher. So this could be the beginning of a major problem in America, and the bond market is rejecting what the Federal Reserve is telling us. And if it rejects it and people run away from the bond market, we are going to see a massive rotation of money out of bonds and the unwillingness to buy bonds, an interest rate spike at some point, or maybe that's already started, and then a huge rotation of money towards physical assets. I just hope that I purchased enough as soon as I did, and I can continue to load in before the big move occurs. It's always better to get as much as you can. Grady says, take a long, hard look at this chart. Why? Because it is your ticket out of the rat race. As a proxy ratio chart for the two sectors, silver producer AG is extremely undervalued versus tech darling NVIDIA. Fortunes will be made. It's a historical opportunity. We get one chance. And he's talking about First Majestic way down here, a very probable breakout against NVIDIA. It's a 15-year bullish falling wedge that we've broken to the downside. It says, as a proxy ratio chart for the two sectors, silver producer AG is extremely undervalued versus tech darling NVIDIA. He's expecting an end around the apex move up, my own term pattern, of a monster move where silver and gold outperform. Why would that be the case? This right here. The unwillingness for people to buy bonds are going to have a large rotation into metals and most likely commodities worldwide. And it could start with the 10-year bond and a problem in the bond market. If people are not willing to buy bonds and they have to release a lot more bonds, what happens? Where does the money go? And it's not just a little bit of money. This is a lot of money. And then what they're going to probably do is quantitative easing. They're going to have to buy bonds, and that's just going to fuel the price move even more in terms of gold, silver, and other precious metals. It's going to be a run and a grab for hard assets at some point. Then it becomes a game of confidence. If they lose confidence in the system, people will run away from the currencies too. As bonds collapse, they're going to put pressure on currencies, because what they do is they save the bond market at the expense of the currency market. Then you're going to see a currency problem. When you see a currency problem, the dollar will drop, and then the price of everything will go up. And the reason he has this stance, the reason he says we get one chance, this is only going to happen once. The currency is going to eat it, and it could potentially have problems forever, as in it goes away. If that occurs, that means that all the value of some of these companies that are all jacked up in terms of their valuations is going to rotate into things that are undervalued and needed by society. And that's going to be one heck of a rotation. SRS Rocker Report. LBMA silver inventories continue to decline. Since 2021 peak, gold inventories are down 11%, while silver inventories are 28% lower. With record industrial silver demand, strong investment demand will continue to draw down inventories. And here's our inventories, London Vault data, 11% down for gold, and a massive 28% down from the 2021 peak of 337 million ounces of silver at a very low level. Just wait if this were to transpire and everybody runs at these two things. I hate to say it, guys, but 800,000 ounces or so, 850,000 ounces of silver, that is nothing. That is 2 ounces. No, that's no, that's 800. I think that's 800 million ounces. So 800 million is 2 ounces per person in just America of silver. And silver is what, 20 or what, $32 or so? It's like $60, $65. Silver is going to be, I mean, it's going to be gone. It's going to be gone. Same with all the other metals. Peter says, don't say we didn't warn you about oil. City of Houston for the win. Says the notion that oil market balances are currently worse than COVID when oversupply topped 18 million barrels per day is nothing short of lunacy. There is literally not a single physical market data point that justifies oil positioning at all-time lows. It's not supply nor demand, it's politics. Guys, they're getting desperate here. The government and Federal Reserve, they are getting desperate. They're going to try to hit oil. They're going to try to hit gold, silver. Guys, they're going to do whatever they can to hold this thing and try to hold it together for as long as they can. This is going to get eaten up. The bond market's going to it's going to hurt them. It's going to come in. Rates are going to spike. These inventory levels are going to go to zero, and the oil market's going to go vertical. It's all currency related. It's not about a commodity bull market of supply and demand. It's about the dollar and the supply of dollar bills. And commodities are the thing that basically keeps this all in balance. So if you print a buttload of money and you've got all this credit circulating through the system, it's going to be highly inflationary. And these markets are going to react to that. And then people are going to start to get scared. Then it becomes a confidence game. You lose confidence, these inventories they'll be gone if people want to leave the dollar. Energy headline, it says Chevron sells oil sands and shale assets in Canada for $6.5 billion to Canadian Natural Resources. I don't know why they would do that. Because they sold some really good assets at the bottom of the market. Stupid. JC Parrott says economists and the three sell side analysts who still have jobs get all the sheep who follow them to go to cash when the yield curve inverted 2 years ago, to make sure they completely missed back-to-back years of 20+% returns in the S&P 500. It's now inverting again. Here it is coming back down and inverting. What if this was a false break and we come all the way down for another double bottom? What if we double bottom this thing, where this is one bottom and then we come all the way back down and come and have another big bottom here? Oh, that would be crazy. It got everyone off sides. Everyone. If it does do that. Unusual Whale says, just in, the White House and U.S. Biden administration is working on plans to bring back decommissioned nuclear power reactors and plants online to meet energy demands and emissions-free electricity per White House officials. Well, why did you guys take it down in the first place? Why did you take that down in the first place? Like, I don't understand any of these governments at all. At all. They are taking down all these nuclear power plants. And then when AI comes and AI wants to use them, why are they all coming back? If they are so sure that nuclear is bad for the world, why are they all switching their stance just because artificial intelligence needs it? What does the government and artificial intelligence have in common? Why do they want this? Is it the ability to wage war against each other and it becomes an artificial intelligence race? Like, why do they need to do this? There is something incredibly fishy going on when I read this stuff and the pivot that these governments are doing. There's got to be some benefit for them. I don't know what it is. Silver miners struggle to keep up with the demand as supply hasn't been able to keep up for the last 3 years, and 2024 is expected to be the same. How do I know that's a right statement? Because the inventories are dropping. It hasn't been able to keep up, so it comes from inventories. So yeah, that's a good statement. Illuminati, the real pandemic is how stupid everyone is. Nailed it. Nailed it. And he could put how governments are that bad. I mean, I don't know. Nothing makes sense to me anymore, guys. Nothing makes sense to me anymore. I look around the world, I watch all these things, I look at the companies, I look what they're doing and implementing. None of it makes any sense to me. None of it. I don't even recognize what this world looks like compared to the early 2000s. It looks completely different. And this here is exactly what I see. The real pandemic is how stupid everyone is acting and doing right now. All over the world, we are seeing countries embrace nuclear power and consider restarting plants. This time, the good news comes from Philippines. Why is everybody changing their stance? What occurred? Here's some more if you guys want to know. South Korea will study reviving the mothballed nuclear power plant in the Philippines. The feasibility study on the nuclear plant will start in January. What's going on here? Orino's mine here, 7 million pounds per year uranium mine, delayed from 2028 to at least 2030. What's going on here? France's 1.6 billion uranium deal with Mongolia faces delays. The developing uranium mine. Do you think that all these developers are going to bring their mines before 2030? I don't think there's going to be hardly any. And then we've got all these restarts coming. They're going to squeeze the crap out of uranium. And I'm watching on Twitter a few weeks or month ago, and everyone's bitching at each other, talking about, oh, the uranium trade is so bad. Guys, they don't have any, there's no pounds coming. It's done. 2030? Where's this uranium going to come from? We're going to have a gap of like 5 years where I don't know what the heck's going to happen. Good luck with that, is what I'm going to say. Japan restarts are coming. Oh, Japan. Well, I think that one's kind of obvious. 13 reactors are currently in process of restart approval. So that's good. At least we're putting nuclear in, and we got to get rid of all these stupid renewable things that are coming about. They're ugly. They're very wasteful. They damage the environment, not only in operation but also all the minerals that it requires in mining. So at least, hopefully, we can put in a bunch of nuclear. The problem is, where the heck are we going to get all the uranium to basically fill these things up with? The uranium guys are. I don't think anything's coming before 2030, really. Like, not a huge amount. The no landing scenario. No landing? I thought there was a soft landing and hard landing. So the no landing scenario is a situation where the U.S. economy keeps growing, inflation reignites, and the Fed has little room to cut interest rates. Had largely disappeared as bond market talking points in recent months. So maybe the no landing is coming back. So what is this telling me? It tells me that nobody knows what the heck is coming. This is a weird situation that we're in, very difficult to read, and no one really knows what the heck's coming. Everybody got short oil. They thought this recession is going to come. We're going to have the lowering of interest rates. Everyone positioned short, and what's happening? Squeezy, squeezy. And I'm sure they are manipulating numbers. I'm sure they are. They're probably in there jacking around with employment numbers. That's probably why they hired so many people in the government. They're doing all sorts of crap, guys. They really are. Dave Kranzler says, lots of laugh, or laugh out loud. Market dumped Fortuna Silver Mines on the Friday night news, which was hyperbolized. Now it's ignoring this, which explains any mining company in compliance with the new laws will not lose its license. I just bought a truckload of 4.5 calls. So Fortuna is not losing its license. Everybody needs to calm the heck down. Back to the net long position in crude, but still a ton of room for shorts to get squeezed. So they were net short. Now it's come back up and bounced a little bit. Now it's still net long, but it's barely long. U.S. futures slide as yields rise back above 4%. Curve reinverts. Oil surges. What is going on with this yield curve? What's going on with the bond market? What's going on with oil? God, everybody's got this all sorts of mixed up and wrong. The WTI valuation gap narrowed today, down about $5 undervalued. So oil is still undervalued. The fair value is roughly $82 a barrel. Peter Schiff says, as I forecast, the yield on the 10-year Treasury is now over 4%. It will keep rising until the Fed returns to QE, quantitative easing, likely by Q1 of 2025. Without QE, yields will rise above 5%, then 6%. Oil prices are also rising, above $76 a barrel, up 17% since last month's low. QE will send oil much higher. Much higher. We've got Ben Graham here. He says, the essence of investment management is the management of risks, not the management of returns. Well-managed portfolios start with this precept, says Benjamin Graham. Lord Marx, waiting for the bottom is folly. What then should be the investor's criteria? The answer is simple. If something's cheap based on the relationship between price and intrinsic value, you should buy it. And if it cheapens further, you should buy more. That's your cost averaging and approach and the strategy that a lot of people need to adopt. Peter Lynch says, all you need for a lifetime of successful investing is a few big winners. And the pluses from those will overwhelm the minuses from the stocks that don't work out. So not everyone is perfect in choosing their stock selecting. So someone shouldn't be held to being perfect. Don't hold yourself to it. Charlie says, you only get a few opportunities and you have to grab them aggressively when they come, because even in the most favored life, they're really rare. So when those opportunities come, grab them and hold on to them. And that's where we're going to end it, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website, and we'll catch you later. This is Finding Value.